Good evening, ladies and gentlemen. Welcome to the second Dirty December video. If you're new, I'm doing a Dirty December series talking about stocks that are likely to benefit from the bounce in income in the festive period. We are categorizing, you can't categorize October, November, December as the festive period of the year. So we are about 1.5 a month and some few days in to the festive period. Even though some people would say the Ember months, the start of the Ember months, are the festive period, but the real groovy period is October to December every year. So a disclaimer: this is not investment or trading or personal finance advice. Views are subject to change at any point in time without notice. Analysts on the team may or may not have a position in any of the stocks discussed. Past performance is no guarantee our future performance. Before we dive in, I'd like to thank everyone who's taken out the time to like, to share, to subscribe. I greatly appreciate you for doing so. You may wonder, why do I have to keep doing so? First is, I do not take my audience for granted. Every comment, every like, every share is important. You do not owe me, or you don't owe the firm that. So for you to take out time to do so, it is greatly appreciated. For comments, questions, feedback, you can drop in the comment section or email info@greenticketales.com. I'm going to end this video in a somewhat different name because there are a few slides that I didn't include, so I'm going to jump online to go through some stuff. What is Dirty December? So in case you just are new to the channel, in case you just aren't even following it in Nigeria, I'd say it refers to the festive periods, activities that take place in the last quarter of the year, climaxing in the month of December. And the word dirty means to have fun, to enjoy yourself. So it's, the origin of that word. There was a festival, I think a social event organized by Mr. Easy. And then somewhere along the line, the word Dirty December, it just kind of caught. It's the optic, the raves, the social activities, especially in the commercial cities, Lagos, Abuja, Port Harcourt. You have increased social activities. It's almost like a frenzy in Lagos. I'm looking at it, my social media timetable, every day events, packed filled with events, and you have increased spending, consumer spending at this point of the year. Why? People want to make merry, people want to have fun, people want to enjoy themselves. For a lot of people, they've saved up, and this is the period which they get to spend more social activities, family and friends, end of year activities by companies. There's just so much of spending, so much of merriment and enjoyment. And so who benefits from this? Companies in the hospitality space, the hotels. You have 2 listed hotels, and you have a real estate entity that has a bit of a hotel, which I will be diving in. But I'll be focusing on the listed hotels. Ikeja Hotel, Transcorp hotels will benefit. Why? Increased social activities means you have more patronage of hotels and other players in the hospitality space. For hotels, you have higher patronage in terms of take-ups of room, take-up of halls for events, as well as food-related events. So clearly speaking, depending on the organization, some may say you can rent a hall, and some may say you can rent a hall, we can give you discount for rooms. You have social events, so people take up, the organizers take up the halls, organizers take up some rooms. There's money. In some cases, you have complimentary rooms and all that. Food comes into play. Some may say handle your food, you can bring in food. Some may say you have to take food in the venue. So whichever way it is, it's going to be a profitable period for these firms. Why do I say so? Let's start with Ikeja Hotel. And you see, I hope this is simple. At the top, you have numbers for the first 3 quarters of the year. Q1, Q2, Q3 for FY 2024. And then at the bottom, you have the first 3 quarters for this current financial year. So clearly, if you can compare, look at the revenue, look at the profits. There's a big bounce. 3.8 revenue Q1 last year. This year is 6.1. That tells me that on average, you are having revenue increase by almost roughly late 40s, 50 something percent in terms of increase in revenue. And for profit is, the bounce is even bigger in terms of profit. Why do I say so? Look at Q1 last year, 600 odd million in profit. This year it's 1.6 billion. That's almost that's more than 2x. So that really, you can see the bounce. And I've worked out my estimates for this firm. revenue, I think we're going to end the year with somewhere around maybe what, uh, 27.7 billion in revenue, 7.3 billion in profit after tax. I had some numbers in case you arrived at this. I didn't want to complicate this too much. Usually, what I did is to extrapolate, meaning compared quarters last year with this year, work out the average increase in terms of revenue and earnings and all that. But I don't want to make it too complex for you. But you can see my workings clearly, and you can extrapolate yours as well. So you're not bound to take mine, but this is just to show workings when I say that it's going to be a jolly good time for these hotels. I have the time, 5 minutes in, I need to rush. So 27.7 billion in revenue, 7.3 billion profit after tax. Earnings per share, I think it would be about 3.58 naira. Current price as at Friday, yesterday. And so stock at this point is trading at 4 times earnings. I think this stock easily should be trading at 6 to 7 times earnings. I think that's a fair valuation for this firm. So what does that tell you? My target price 21.48. That's a potential upside of about 23%. Even if you want to be conservative, you would end with a potential upside of maybe what, 15-20%. I think that's fair. I think they'll pay a final dividend of 2 naira a share. It could be more, it could be less. It seems that they're paying quarterly dividends around 3 kobo ish, which is tiny. So that's my estimate, full year dividend yield and all that, based on my estimated full year dividend. So add the two together, dividend yield and potential upside, you have about 30 something percent return. So that's good for the firm. Now for Transcorp, in case you're wondering, I have a sell view on this stock. Why? The only reason why I have a sell view, in fact, I actually debated, should I include this, should I not include this, but it would have been odd not to include this. Why do I have a sell view? Stock is trading at, by my estimates, it's probably going to trade at 75 times earnings. I'm sorry, I don't think anything justifies this valuation. It Nothing. Even if you're growing your earnings 40% on average every year, there's no way you should be trading at 75 times earnings. A hotel, what are you doing? Are you growing your revenues and profits, earnings? Are you growing your profits at 75 times earnings? I don't think that's the case. So I have a sell view, but I just thought to include it because you can clearly see the bounce. Q4 last year at 21.6 billion in revenue. I mean, so clearly there's a big bounce, decent bounce, really, in revenue. And if you look at profits, yeah, profit is a bit tipsy torsy. Q1 last year 5 billion profits, Q4 4.6. It dipped. Maybe it's a costing. Probably, I think I did H1 numbers or 9-month numbers somewhere. Memory has skipped my mind. 7 minutes 53 seconds in this video, so clearly you can see top line, there's decent top line growth. Q1 and Q2 from this firm, maybe it's a pattern thing, seems to be fairly weak in terms of our profit. But Q3 year on year and Q4 year on year, my estimate for Q4, in fact Q4 is very likely this firm will exceed it, because last year they didn't have an event center. This year they had an event center, and I think easily, I don't see why that event center can't bring in Q4 this year. Ideally, I mean, I have some internal numbers I've worked for myself. I see no reason why that event center can't easily do 2-3 billion naira a month. So if to multiply that, really, I think the event center can do that for them easily. My view on both stocks is you need to even look beyond FY 2025, 26 pre-election year, 27 election year. These guys are going to make a chunk of money from that, so you want to have that in your consideration. So it's a sell for me, even though there'll be decent uptick in revenue and all that. So that's for this stock. Now let me quickly dive into, yes, I have this here. Let me use this. UPDC has a small hotel unit, and I initially included it, but it just became too complex, so I skipped it, and I'm just going to walk you through the numbers. The hotel isn't doing so well, but in my view, this is one of the reasons why I feel that UPDC is severely underpriced. You can see here there's an uptick in revenue. Firm is still loss making. 9-month 25, you had the 256 million loss after tax. 9-month 24, 285 million loss after tax. But revenue is increasing. But in my view, in working out what this thing is worth, let me see if I can fish out it should be somewhere here, the assets and all that. it wasn't one of the numbers. Let's see if we can fish out what's that hotel, or what the firm is valuing that hotel at. Do I go up? Do I go down? Do I go up? Do I go down? Um so do we have it here? Let's see how much they invested in the hotel. What? That's about 2 billion or so principal investment. But let's okay, yes, this is what I was looking for. So you can see that what um the hotel, which is UPDC hotel. I mean, they say equity is negative. Sure, you have more current liabilities and all that, but what's the value of this hotel? Are you putting the value at 8.1 billion? I think this hotel is undervalued, whichever way you look at it. Clearly, it's undervalued. But one thing you can see from here is you can see the revenues. The slight uptick in revenue from FY24 to 9 month 25. Profit wise, the losses have reduced drastically. So clearly, with the 3.9 million naira in losses as at 9 month 2024, I see no reason why this firm shouldn't do a profit this year, just based because clearly you can see FY24 revenue 843 million, 9 month 25 1 billion. So clearly I mean, even here, profit before tax wise, they've returned to profitability this year. Mild loss, so I see no reason why they can't um, uh, 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 make a slight profit this year. But for me, I still feel, and I'm not bothered about the current liabilities. Yes, liabilities matter and all that, but are you telling me, are you saying that this hotel is worth somewhere around 8 point something billion? I think that that valuation seems to be too cheap. But that's my view, ladies and gentlemen. That's pretty much about it. 12 minutes in, longer than usual. Thank you, and see you in the next video.